Nigeria's GDP grew by 3.4% in 2024, yet the economy shrank by a staggering 168 billion in dollar terms. Can we close the output gap and unlock real growth? Good morning and welcome to another power-packed episode of Business Week. This week, Congo DRC has halted cobalt exports for 4 whole months, rattling EV and tech supply chains around the world, while Nigeria's pension industry has surged to a record 4.16 trillion in growth, but would it fuel real investment? Meanwhile, global energy firm BP is backtracking on renewables, doubling down on fossil fuels, and the EU is preparing for a showdown over new US trade barriers. Back home here, Nigeria's ICT sector is now driving 17% of real GDP, proving that digital transformation is here to stay. And as the government pressures cement makers to cut prices, will lower costs finally trickle down to consumers? In today's deep dive, we tackle the question of how Nigeria can close its widening output gap. Despite growth on paper, productivity is underperforming. I'll be speaking with Tilewa Adebajo on that. Well, if you missed all the big business stories of the week, fret not. I'm here to help you catch up as always. I'm Rolake Akinkuwe-Filani. Stay tuned. As always, we start with a look at global energy commodities, and it was a shock of red week on week. Brent crude was down 2.28% from the previous Friday. The big news here is several things. First of all, Iran may be boosting oil exports from its semi-autonomous Kurdistan region, bringing 180,000 barrels back on the market. And of course, you would have seen the not so diplomatic display between Zelensky, Vance, and Trump in the Oval Office during the week. Now, what all this means for geopolitics and oil markets is that this could really position Russia quite well in terms of its oil exports. So, not so favorable conditions there for Ukraine. Let's see how that pans out. WTI crude, of course, was down as well by 1.52%. Natural gas was down by a whopping 11.42% from the previous week, and RBOB gasoline was down by 3.43%. Let's take a look at global equities markets, starting, of course, with the Nigeria Stock Exchange. This actually is the first monthly loss on the all-share index since the start of the year, although the year-to-date return on the market is about 4.6%, lower than in previous years. Deal volumes, a little over 12,000 deals, but down by 8.48% from the previous week. And volume of shares traded, 458.25 million shares with a value of 14.07 billion. Equity cap has been falling, down by 0.62% to close the week at 67.19 trillion naira. Let's take a look at stock markets in Africa. Well, Joburg here was the big downtrodden stock market, down by 3.34% on the week, but Accra, a green shining light there, up by 1.74%, while Casablanca and Nairobi were both down. Let's take a look at Wall Street. Wall Street not reacting very well to news coming out from North America. Of course, we're all preparing for the tariff wars, the tariff wars. Markets not really sure what to make of this, but nevertheless reacting negatively. Dow Jones was down by 0.68%. S&P 500 was down by 2.97%. And the NASDAQ composite was down. Those are the tech stocks, the big ones, down by 5.73%. Now for my top picks from around the world. The first big news here, Congo, the Democratic Republic of the Congo, has suspended cobalt exports for 4 whole months. Now, when you consider that Congo accounts for 75% of global cobalt supplies, this could have a significant impact on all not oil, so obsessed with oil. Cobalt prices. Cobalt prices are at an all-time low of about $9.50 per pound. And Congo is worried about falling prices and so has halted production, given its huge market share, in a bid to somewhat control the global cobalt price. Will that be a wise strategy? Interestingly, its closest competitor in terms of cobalt exports is Indonesia. Indonesia has displaced the likes of Australia, China, India to become number 2 cobalt producer around the world and may take advantage of the gap that has been left by Congo. Indonesia now accounts for 20% of global cobalt exports. Well, for artisanal miners in Congo, this might also provide a bit of a headache because they need to make money, but the government trying to reassure them that one of the major state-owned controlled companies will buy stockpiles of cobalt from local artisanal miners to help protect their income. But again, let's see if this DRC strategy works. Nigeria's pension industry hit a record 4.16 trillion growth. Now we're at about 22.5 trillion in pension assets. Now we have around 300,000 new people join the contributory pension scheme to bring retirement savings accounts in the country well over 10.1 trillion naira. So last year was a very busy year for the pension industry, no thanks to things like the banking sector recapitalization. Of course, pension funds hold a significant share of banking sector stocks, but we've also seen advances like technology advances which have improved the customer experience online digitally for pension holders also improved. And we also know, according to the stats that were released, that the pension funds have increased their holdings in private equity assets, which are now up to 130 billion naira worth of holdings in private equity assets. So good news there for the pension industry, but we still need to cast that net much wider to increase the number of retirement savings accounts in the country. All major BP has slashed its spending, has said it will slash its spending on renewable energy. What is happening? Is it the reverse energy transition? Well, the big news here is that one of the major hedge funds that is a shareholder in BP is worried about profits, right? And BP is now thinking, look, we need to boost our oil and gas production. They want to boost to 2.5 billion barrels by 2030. They want to slash spending on renewable energy from 5 billion to 2 billion and increase spending on fossil fuels by 20%. But it seems like BP wants to eat its cake and have it, because it's still saying, despite all of this, we still have a net zero target to reduce carbon emissions by 2050 or whatever the case may be. And now the company is also thinking of divesting its onshore wind energy division in America because it's also facing about $20 billion in debt, which it wants to clear over the next few years. So these asset sales might mean that the renewable energy assets are the ones in the eye of the storm. Will other oil majors follow suit? Well, we'll see. Moving on to something else, the EU has said it will respond firmly to what it terms the unjustified trade barrier tariff to be imposed by the Trump administration. The Trump administration will be imposing a 25% tariff on all imports from the EU. This is a major one. Now, the Trump administration has said, if you were following the news during the week, that the EU was pursuing an anti-American bias. Of course, the EU representatives, European Council President Donald Tusk has said the tariff is unjustified. But interestingly, what many people may not know is that the EU currently has a 10% tariff on US cars. Now, that is 4 times the current tariff that the US imposes on EU cars. So it's important to get both sides of the story here. Let's see how that pans out. It will file a complaint with the World Trade Organization, as to be expected, but Donald Trump is full steam ahead on this one. And finally, Nigeria's oil refining sector grew for the first time since 2018. Quarterly growth. Well, this is good for Nigeria, right? But we haven't seen the same levels of growth that we saw pre-2018. And I think in that last quarter of that year, growth in the oil refining sector was about 33%. Now we're well below 10% quarterly growth. Well, thanks to the Dangote refinery, which is now exporting internationally, as well as helping to supply the domestic market and bring prices down at the pump, Nigeria's oil refining sector has seen its first quarterly growth. That's great news, but let's get the refineries all around the country working, shall we? That's it for my top picks from around the world. And now for some other top stories from around the world. Trump on Tuesday floated the idea of replacing a visa program for foreign investors with a so-called gold card that could be bought for £5 million as a route to American citizenship. Trump told reporters he would replace the EB-5 immigrant investor visa program, which allows foreign investors of large sums of money that create or preserve U.S. jobs to become permanent residents with a so-called gold card. The EB-5 program grants green cards to foreigners promising to invest in U.S. businesses. Still in the U.S., a growing number of U.S. agencies have instructed employees not to comply immediately with Elon Musk's demand to list their weekly accomplishments or face termination. The directive issued through the Office of Personnel Management is part of Musk's broader effort to downsize the federal workforce under the Trump administration's Department of Government Efficiency. The FBI and State Department have told employees to follow standard reporting procedures rather than respond directly to Musk's order. Meanwhile, legal experts and the largest federal workers' union question whether Musk has the authority to fire non-responders. U.S. tech giant Google told staffers in its people operations and cloud organizations this week that it plans to cut employees as part of internal reorganization. The company will offer a voluntary exit program to U.S.-based full-time employees in people operations, Google's human relations division, starting in early March. The irony, according to a memo issued Tuesday by HR Chief Fiona Kikoni, the latest cuts come after Finance Chief Anat Ashkenazi said one of her top priorities will be to drive more cost-cutting as Google expands its spending on AI infrastructure this year. South Africa's Eskom has managed to restore 8 units at power plants after implementing its highest stage of controlled power cuts early last week. The power utility said after multiple failures at Majuba and Camden power stations over the weekend. Eskom applied stage 3 power cuts, known locally as load shedding, effectively cutting 3,000 megawatts to the national grid. At the end of January, Eskom implemented similar power cuts after 10 months of uninterrupted supply as the utility aims to overcome chronic outages that have curtailed economic growth for years. Sudan's gold industry rebounded last year as the government took steps to bolster revenue amidst the civil war, including signing mining deals with companies from China, Russia, and Qatar. The country produced 65 tons of the bullion in 2024, generating some $1.6 billion in government revenue. That's according to data from the state-run Sudanese Mineral Resources Company. That compares with 35.4 tons and $2.02 billion in 2022 before the war erupted, with the recent revenue gains partly reflective of a gold price surge. The reliability of the data collected since then is questionable, although the industry initially took a severe hit. And finally, Nigeria's National Bureau of Statistics says Nigeria's annual gross GDP rate grew by 3.84% in the fourth quarter of 2024. In its GDP report published on Tuesday, NBS said the growth rate is higher than the 3.46% recorded in the third quarter of 2024. The Bureau said the growth rate is also higher than the 3.46% recorded in the fourth quarter of 2023. Still on Nigeria, according to the data from the NBS, in the fourth quarter of last year, the ICT sector in Nigeria accounted for 17% of the real GDP of the nation, compared to 6.35% in the previous quarter of 2024, indicating an increase. The ICT sector's yearly contribution to real GDP in 2024 was 17.68%, which was higher than the 17.3% reported in 2023. And now on cement, citing better conditions, Nigeria's government has urged cement manufacturers to reduce prices to 7,000 naira per bag. According to a statement on the Ministry of Works website, Senator Engineer David Umahi, the Minister of Works, made this request during a meeting held during the week at the ministry's headquarters in Abuja. According to Umahi, the leveling of the naira to 1,400 naira to the dollar and the decrease in the price of gasoline had made it easier to lower cement prices.